Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Elaine Kub recaps market reaction to the USDA's August crop report. Suat Irmak talks about scheduling the last irrigation of the season. Tina Barrett explains how overtime rules might impact ag operations. And Trey Patterson discusses calf management going into weaning. Elaine Kub is our corn and soybean market analyst this week. The U.S. Department of Agriculture expects 10 corn-growing states to achieve record yields in 2016. It also believes farmers in 5 states will notch record average soybean yields. For the nation as a whole, the agency's August crop report released last week projects best ever production and yield in both corn and soybeans. The USDA expects Nebraska will follow suit and be the 3rd largest corn producer and 5th largest soybean producer. However, increases in demand categories for both commodities arguably helped buoy price reactions to the latest round of numbers. We talked with Elaine Wednesday afternoon and began by asking for her thoughts about the USDA's projections.
Well, those were very big numbers. They came out and said we're going to have more than 15 billion bushels of corn and more than 4 billion bushels of soybeans. So those seem like very large numbers, and we would have expected to see the market just collapse from that kind of bearish numbers. Those were surprisingly large. And maybe it was just coincidence, but at the same time, the palm oil market, sort of an international market, really was bullish for the edible oils that soybeans really benefited from. And so soybeans ended up closing the day higher and leading corn higher, and that's continued to be the case here. Even through this week, we've continued to churn steadier higher.
Were the other demand numbers enough to help kind of stabilize prices that day?
That's absolutely part of it. So we see the really big production numbers, and we do see larger ending stocks projected because of those production numbers. But there were also some boosts when you have this much availability of the feed grains in particular. So this is a story for corn and for wheat, which has a lot of low quality or low protein wheat that's going to work its way into the feed market. They are expecting to see that increase by 40 million bushels or 80 million bushels in the feed sector, as well as ethanol is doing well, as well as exports perhaps someday working their way into Brazil. So there are reasons to think that the ending stocks aren't going to be so crushing as those production numbers imply.
So I think those production numbers, it's important to note they were taken late July, early August, and in about a week and a half or so, enumerators will go out again to those same plots and take a look again. So the question is, during the month of August, has weather been enough to lower the production estimate?
No, I don't think there's a weather problem that we need to worry about, but I mean, there's certainly an argument to be made that those numbers were too large and that the facts won't bear it out once we start seeing, really reliable harvest estimates, once you get out and count pods or get out there and count kernels. And certainly once you see the actual harvest reports, it's certainly possible that those numbers will only get trimmed from this point forward in future reports.
Is that what the trade is expecting?
I think so. I think that's another reason why we didn't see them suddenly collapse, that this is going to be as bearish as a report as we see for the 2016 crop.
One more note on the production numbers. There's been a lot of talk this week in many marketing circles about tip back in corn. People are noticing it a lot. Do you think that's enough to make a huge difference in September?
I think field by field, just seeing tip back is not enough to worry about yield. That may just be a symptom of having really aggressive planting populations. So countrywide, I don't necessarily think that a few isolated, or not even isolated, even extended reports of tip back, that's not enough to convince me that we're going to have a major crop problem. Probably, like I said, trim it down from the 15 billion bushel number, but not enough to get really bullish.
Tell me what the reasons would be to be bullish right now.
Well, like I mentioned, there's been a lot of interest coming into the soybean market. We're seeing net long positions from the commercial funds in soybeans, perhaps tied to the international idea of the edible oil market, but perhaps also tied to the idea that commodities can be a hedge against inflation. That's another big headline that you're seeing this week, is the thought that the Fed is getting hawkish about raising interest rates. Some say as early as September, but maybe more like December, maybe early 2017. But if inflation starts coming in, that means that material goods start to be worth more, and commodities are material goods. So hopefully we'll see some more investment from the investment side of the market coming in and juicing up these prices.
What's the advice to the farmer that has corn that needs to be moved before harvest?
Well, logistically, get it moved before harvest. And, you know, basis-wise, I don't think there's a lot of concern about something, you know, falling apart or juicing that up between now and harvest. But just logistically, you've got to get it moved. I don't know if you want to be bullish about the flat prices. I don't know that you'd be bullish enough to put it into storage or a DP program, but just get it moved, yeah.
What's the thought on basis then?
Well, you know, I was worried when you talk about a 15 billion bushel crop, record large, that the industry has never handled anything that large before. I was worried that we might be looking at a repeat of a 2013 or a 2014 when the freight was so challenging and basis just fell apart because the industry could not physically move it. However, this year is different because there's not as much coal moving on the rail lines. Natural gas is so cheap, and it's the winner in the energy market for creating electricity. So the grain freight hopefully will not be competing against coal, and so we won't, fingers crossed, have that basis collapse at harvest this year.
What do you think about the export market right now for both corn and soybeans?
I'd like to see, obviously, the corn get exported to Brazil to approve U.S. exports and start taking that in. There are areas in Brazil where the corn is the equivalent of like $7 per bushel. So the arbitrage is absolutely there to make that trade work if the nuts and bolts can be handled.
If you talk about a large production year this year, how is the market handling it for next year's crop?
You know, it's really interesting. 15 million bushels, again, it sounds so crazy, but you look at the spreads in the futures contracts between December and March, and it's only about 10 cents, less than 10 cents probably, which suggests that the commercial industry is not freaking out, that they are confident that they've got the infrastructure to deal with that much grain. So that's, again, not a real reason to feel really scared about that number.
Next week, Jessica Sampson from the Livestock Marketing Information Center will join us to analyze cattle markets at the Goodmanson Sandhills Lab Open House near Whitman, Nebraska. Nebraska's corn crop is rated 76% good to excellent, according to the latest report from Nebraska's National Agricultural Statistics Service. That percentage is the same as a week ago. 17% of the crop is dented, 2 points behind the state's 5-year average. As we approach the home stretch of the growing season, this week we talked with Nebraska Extension's Suat Irmak about scheduling the final irrigation of the year. Suat leads the Nebraska Ag Water Management Network and spoke with us Wednesday morning here on UNL's East Campus about the corn crop's water needs.
Corn water requirement is a function of several different variables, including climate, soil type, hybrid and management practices. But primarily, corn physiological stages also impact the crop water requirement. Climate variables are primarily drive irrigation requirement, solar radiation, temperature, wind speed, vapor pressure deficit, and so on. As long as the corn continues its physiological functions, it needs water to continue that function.
I know it's varying across the state, and even within counties, I'm sure, but how much water would corn crops need at about this time of the year?
You know, even in the same location, the planting time can change from one field to another, and then growth rate of the same crop in the same location can change from one field to another. But overall, as an example for corn, from our 5-stage to physiological maturity, it takes about 3.5 to 4 inches of water to finish that corn crop all the way to physiological maturity.
Why is it important to focus on correctly timing the last irrigation of the season?
Well, it is important for several different reasons, and one of them is, of course, reducing the irrigation water application is one of our goals to increase our efficiency. and associated benefits such as reducing potential nitrogen leaching to the soil profile and then to other water resources, groundwater and surface water resources, saving energy and other benefits. But also to maintain a proper soil moisture level in the crop root zone for maximum and most efficient water and nutrient uptake. So these are some of the most benefits.
So can you give me an example of a situation with X percent in the profile and at X stage in the growing season, how much more water the crop would need, when you might be able to schedule the last irrigation?
So let's take an example for corn crop. Let's say it's at R5 stage as an example. If it takes 3.5 or 4 inches, between 3.5 and 4 inches to take this corn crop from R5 to physiological maturity, and if we are implementing some kind of technology to monitor soil moisture in the soil profile, we know exactly how much water we have in the soil profile. And then, of course, we monitor precipitation from rain gauges or other sources. So it takes 4 inches to go from R5 to physiological maturity, and then we know how much we have through soil moisture sensing devices. And then let's assume we have 2 inches in the soil profile, available soil moisture. Then we can monitor those two components over time and make a decision how much, when to finish that season, and then make the decision on the last irrigation of the season.
Is the goal to leave some water in the profile?
Actually, the goal is to leave some but minimal amount of water, to deplete as much as possible, and I will suggest perhaps deplete by 60 to 70% of the available water, so that we can keep that available profile or the deficit in the profile to be able to store potential wintertime off-season precipitation for the next growing season.
If you look at corn, there is diminishing return as the season goes along with each inch of water applied, correct?
That is correct.
How much does it differ in soybeans?
For soybean, actually it is very similar to corn. After certain threshold, after certain irrigation application, there is a diminishing return. In fact, the diminishing return curve, it's not stable. It actually declines after certain threshold, and those values, declining or diminishing return values, are different for corn and soybean, but we have very good ideas on what those numbers are for different locations in the state.
On the Market Journal website, we'll link to more information about the Nebraska Ag Water Management Network and scheduling the final irrigation of the year. Some workers may be able to earn more money later this year when the U.S. Department of Labor's new overtime rules go into effect. Beginning December 1st, non-exempt workers earning $47,476 per year or $913 per week are to be paid overtime for hours worked over 40 per week. Previously, overtime rules stipulated additional compensation for workers earning $455 a week or $23,660 per year. We recently talked with Tina Barrett from Nebraska Farm Business Inc. to learn how these changes could impact employers and employees in agriculture.
We've had an overtime rule for a long time. It's just that we have now upped the limit, so it's starting to affect a lot more people, and we're getting a lot of questions about it. The big news for agriculture is that there is no news, and that agriculture employers are still exempt from this rule, as they've always been, and can continue to go on.
Explain to me why that is.
I don't know why we get so many special rules in agriculture, but there are. And it's one of the things that's really important, to make sure that you have professionals working for you that understand that, because there's lots of things like unemployment, workman's comp, and quarterly filing, and all kinds of things that we don't have to do as ag employers that other employers are required to do.
But what sectors could be in for this that still deal with agriculture?
So I think the important things is that, especially as the operations become more diverse and things change, that there's some things we do typically on a farm that aren't exempt. So we need to be looking at when you're producing or growing or harvesting things, then we're exempt. But some things like custom work could potentially be, if that's a big enough part of your business, need to be a non-ag business. Or trucking probably would be the other pretty major thing that we need to be concerned about. And sometimes those things happen gradually over time, where we don't even realize those have become a major part of the business. So maybe what really needs to happen for everybody is just a check-in with your accountant and say, let's make sure that we're still following the rules.
What do operators in those areas need to know about these new rules and what they need to do on their operations?
Right, so if you're going to have an employee who wouldn't be exempt, and they're making less than about $48,000, it's a little bit less than that, and it's like $913 a week or something. But it's about $48,000 a year. Then if they're working more than 40 hours a week, they have to pay overtime, even if you're paying them a salary wage. And so that's going to be an important thing, and we've got to do some calculations as to what their hourly rate is then, and figure that out, again, based on that weekly pay. And so it's going to cause probably more paperwork mess than it's really worth. And we need to be careful because employees that make more than the $48,000 but fall into some exemption rules are still required to pay overtime too. So it's really a kind of a complex, crazy rule that we need to really pay attention to, again, because the penalties of being caught are pretty harsh. So it's easier to follow the rules and pay a little bit extra than to get hit with some of these penalties.
In those areas, it would require workers to log hours essentially and make sure they're under 40.
Yeah, I think that's what we're looking at there, and it's a kind of a tough deal because a lot of salaried employees don't even think about logging hours. They just work until the work is done, and again, it's based on a weekly basis, so we can't say, well, they don't work at all in December, but they work 80 hours a week in July and it averages out. So it is a weekly thing.
Are family members exempt from this?
So there's a few. We can have a key employee exemption. If you own a certain percentage of the business. So if we have a corporate setting, we might be okay there. But you really need to kind of look at those specific facts and circumstances to see if we got anything in there. Another area that we might have concern is if you've got a full-time office worker whose job is not in the production of goods. Is another area where we could be triggering some overtime rules. Even though you are an ag employer.
Who do you talk to if you have questions about this?
So you need to talk to your tax professional, and hopefully they've spent the summer, looking up these rules and figuring things out, and going through, all those things. And like I said, it's maybe just a good time to do a checkup and make sure that the slow evolution of your business hasn't changed things that they need to be aware of.
You can find the Department of Labor's new overtime rules through a link on the Market Journal website. The August Nebraska farmer says Mark Watson doesn't have a yield monitor in his combine. This month's issue says that's not for a lack of tech savviness, it's because yield isn't his ultimate goal. He's more interested in return on investment. On his farm in Box Butte County, Watson has included field peas off and on in his rotation for almost as long as he's been no-tilling. The magazine says when it comes to ROI, field peas play a big role in no-till rotations in the Panhandle. You can read more about Watson's farming operation in the August Nebraska Farmer. At last week's Nebraska Grazing Conference in Kearney, we talked with Trey Patterson from Padlock Ranch in northern Wyoming. Trey presented during Wednesday's session about Padlock Ranch's grazing operation and some of the challenges it faces. We spoke with him about things producers might find helpful to consider with calf management leading up to weaning. Trey, give me an overview of your operation in Wyoming.
We are a diversified cow-calf farm feedlot operation in northern Wyoming, southern Montana. Cow-calf production, we put calves into a growing yard in the fall, feed them forages from our farm, and make yearlings out of them to sell in the spring. We're actually selling cattle throughout the year, but they're delivered, most of them, in the spring of the year.
Trey, tell me why it's important to look at calf management going into the weaning period.
Well, I think a lot of times we do a good job in calf management, through branding time, maybe through midsummer managing pastures, but I think it's critical that we finish well. You want the calves in the best nutritional health that we can have going into weaning. If you're retaining ownership, you feel that yourself, right? Because you got to deal with the health issues. But if you're selling cattle, the cattle buyers want cattle that are healthy, and so things like having appropriate grass management, keeping cattle on good feed, good mineral supplements, I think is really critical. So it's about finishing well.
How do you use mineral supplementation in your operation?
Well, we'll strategically design minerals by analyzing the forage. We know what they need. You try to keep that as least cost as you can, but we want to supply enough mineral to these pairs late in the summer where the calf has an opportunity to consume some of that mineral, and just to set them up so their immune function is good. That depends somewhat on whether you got mineral issues in your area or not.
You mentioned the timing. Can you explain what role the cow, the calf, and the market all play into managing the timing of weaning?
Well, sure. I think one of the things that you have as a manager under your control as you near the fall of the year is to shut off that lactation. And the lactation can be a cheap source of gain for your calves, or it could end up being an expensive source if it's pulling the cow down in condition too far and you have to feed them out of it. So it's if you're paying attention to that, you can extend weaning to allow you to sell more weight, a bigger calf. You can early wean to put more condition on cows. But you can also, the other factor that plays into that is watching what the market signals are telling you and the best time to pull those calves.
Yeah, how talented do you have to be to manage the fluctuations of a market in today's age?
More talented than me, I guarantee you. I think there's certainly analytical tools that you can use. You really just got to use your best judgment. And what we do in our operation is not sell cattle on any one particular day. We try to spread that out to diversify the risk.
How do you do heifer development on your operation?
Well, I think in our operation, calves are weaned, and then we do not try to put a lot of gain on the heifers. They're either stay in a growing yard and are fed a forage-based ration for a slower gain, or if we've got available feed, we turn them back out onto grass, and we'll run them out on grass during the winter. It's tremendous cost savings if you can do that.
You went to school at Nebraska, you did some extension work in South Dakota, you're now working at a ranch in Wyoming. How different is ranching from place to place to place?
Well, I think there are underlying fundamental principles that are the same. These concepts about understanding your lactation curve, understanding nutrition, those are all the same, but every operation, even within state and even within county, is different. And so you have to look at your own individual system and what fits. So there's a lot of diversity, but that's what makes our industry great.
What are some of the challenges that Wyoming ranchers have?
I think one of the big challenges is water. Just water availability and water quality is a tremendous issue. Water's certainly an issue where we're at. What we've been able to do is inventory our ranch resources and use the areas that are better watered in the summertime and use those areas that are poorly watered in the wintertime because the cattle can utilize some snow.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here we are again for the weekly forecast. Before we get to the main forecast, let's take a look at this last week. And of course, we've seen the same routine. Cold front moving through the weekend, then a warm up during the middle of the week, before we see another cold front moving in late in the week and bring us some cooler conditions through the weekend. That's exactly how this week played out. We've seen the warmest temperatures Wednesday and Thursday on a statewide basis, although Tuesday we did see some warmer temperatures in western Nebraska. As the front moved through, we started to see some scattered thunderstorm activity with more concentrated precipitation as we moved through yesterday, and we're seeing the departing precipitation through the eastern Nebraska this morning, and we expect to see a fairly benign weather pattern for the next couple of days with very cool conditions. Now, that's good news because we have been unusually warm over this last 3 months, basically the first half of the growing season, June into the mid-July period. The primary heat was focused on eastern Nebraska. The second portion of this equation was focused on western Nebraska. And when we track the heat or how the crops are developing, we look at what we call GDDs, growing degree day accumulations. We know the range of corn grows best between 50 and 86. So we take and accumulate those over a season, and we can pretty much determine where the crop is going to be. Now, the big debate this year is that the crop has been moving along at an unusually fast pace, and we're kind of seeing that and reflected in the GDD accumulations this year. When we compare the old methodology where we cap the lower and upper limits and compare it to one where we have a lower limit, but we do not cap the upper limit, meaning that if temperatures go above 86, we keep accumulating those temperatures in the GDD calculations, and we look at the differences, we see some unusual things. So if we go to the map, what we are going to notice is from June 1st, we are seeing with an unlimited cap on our upper maximum temperatures that the GDD accumulations are about 200 units higher across western Nebraska to about 100 units higher across extreme northeastern Nebraska. And we take this in terms of percent difference between an uncapped GDD accumulation and the capped GDD accumulation. What you'll notice in western Nebraska, we're running the GDDs about 10% higher than we would have under the old calculation from June 1st. And in eastern Nebraska, not quite there. We're running between 3% in northeast Nebraska to about 7% in southeast Nebraska. That is significant because that would translate into between 3 to 7 days in northeast Nebraska where the crop is ahead of schedule, and in southeast Nebraska we would be looking at about a week, and in western Nebraska we basically are about 12 days ahead of schedule. So this crop is maturing much quicker than normal. Now the good news is we've seen some cooler temperatures move in, and that's in association with the trough that just moved through over the last 24 hours, and that is going to start to move that cold air and there's precipitation toward the Great Lakes. We see some residual energy left over in eastern Nebraska, but that most of that should be dissipated by this afternoon. And as we go into tomorrow, we'll see that the main run of activity over the Great Lakes with a nice northwest flow, so that's going to bring in some cooler temperatures. Western Nebraska will start to get into some of the warmer temperatures building into the region, and everybody should share into that warmth as we go into Monday with high pressure building into the region. It doesn't look to be as extreme. It looks like we're going to see temperatures that are going to be primarily in the 80s with a few isolated 90s, but I'll draw your attention to the southwest, that orange showing moisture starting to move up into our region as we get into Tuesday. We'll start to see that moisture funneling into the central plains over Nebraska, and now we have a trough that's trying to work its way in from the northwest. So we should see some scattered thunderstorm activity break out Tuesday into Wednesday. And as we get into Wednesday with this trough coming closer, we will probably see a period of dryness before we see another piece of energy moving down the region as we go into Thursday. Here comes that piece of energy generating more thunderstorm activity potential across the northern plains and Wyoming and Montana. Some of that may move into the western half of the state. And as we go into Friday, once again another trough pushes in with much more reinforcing cool air, and we cool down. Additionally, as we look out from next Thursday through the following Tuesday, that cold air remains in place. That takes us pretty close to the end of the month. And in terms of precipitation, with that front, we see a lot of precipitation generated by the models.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, scheduling the last irrigation of the season, overtime rules and their impact on ag operations, and calf management going into weaning. As always, you can keep up with Market Journal during the week by following us on Facebook, Twitter, and Instagram. Next week, Jessica Sampson from the LMIC will be our cattle market analyst as we report from the Nebraska Sandhills. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.